our message to clients now is that this really is a jump ball. It will likely come down to those 6 swing states that everyone has been reading quite a bit about, particularly Pennsylvania. Pennsylvania is the most important state in our view. There are some themes, though, that sort of regardless of the election outcome are going to be common between the candidates. One is that the deficits are going up regardless. And that's because the Trump tax cuts on the individual side all expire at the end of next year. Maybe some of them are going to be paid for if they are extended. We assume they will be extended, but most of them won't be. And so that will add to the deficit. And then also importantly, and I think people sort of forget this, but if you just look at sort of the base case scenario under the CBO's estimate for the nonpartisan budget scorekeeper in Washington, I mean, deficits are just structurally high because of entitlement spending, because of Medicare or Social Security. These are really important programs, but they're also really expensive, and neither candidate is going to reform those. So I think the main takeaway here is deficits are going up regardless of who's actually going to win. And then we also think the direction of travel on tariffs is also clear, and export controls and sort of some of this protectionism. Of course, there are going to be shades of gray. Trump most likely sort of more draconian than Harris, but still, again, direction of travel here is clear.
Do you think that any of this is yet reflected in the market? I keep obsessing about the low tax and high tax companies to see if there's something there within this, and just nothing.
I would say that the only time we really started seeing this actually priced in the market was that very short period of time in early July when it did look like, after the debate and after the assassination attempt of former President Trump, that the odds would be a red Republican sweep. That's when you started seeing sort of the term premium reinsert itself in the U.S. Yield curve. You started seeing some of the sort of sector differentiation, but all of that basically has kind of collapsed, has gone away effectively as this race has basically tightened and gone back to really where it was in the spring, which is again just a jump ball.